Welcome to The Explainer. Today we're diving into Bajaj Finance's latest quarter, and let me tell you, it's a fascinating story. It's really a tale of two halves. On one hand, you've got this company that is just firing on all cylinders, posting incredible growth. But on the other, they're sailing directly into some pretty serious economic headwinds.
First things first, to even begin to get a handle on Bajaj Finance, you have to appreciate the sheer scale we're dealing with. The company now serves a staggering 106.5 million customers. I mean, just let that number sink in. That massive foundation is key to everything else we're about to discuss.
And, right from the top, the leadership is projecting confidence. On their big earnings call, the returning managing director, Rajiv Jain, kicked things off by saying it was a good start to the year. But as you're about to see, that's really just the opening line to a much more complex story.
Okay, let's dive into this. Because when you look at the headline numbers, you can absolutely see why they're optimistic. The growth engine is just humming along beautifully.
First up, their assets under management, or AUM. That's the total value of all the loans they've given out. That number swelled by 25% year on year. We're talking nearly 4.5 lakh crores. It's just a massive portfolio that keeps getting bigger and bigger.
So how did they get there? Well, by doing this, booking a record-breaking 13.5 million new loans. And that's in just the first quarter. It shows their whole business machine is running at an incredible pace, just churning out business.
And what's fueling all that loan growth? Well, it's another 4.7 million new customers who came on board in those same 3 months. For a company that's already this huge, the ability to keep expanding their customer base like that is a really key part of their success.
And this chart gives you a great look at their loan book. You can see they're not a one-trick pony. Yeah, mortgages are the biggest slice of the pie at 31%, but their business is spread all over. Urban consumer loans, rural lending, and here's the one to watch, loans to small and medium businesses, or MSME. We are definitely going to come back to that one.
But here's the thing. As strong as all that growth is, it really doesn't paint the complete picture. If you look just beneath the surface of those shiny numbers, management themselves are pointing to some pretty clear and emerging signs of trouble. And this brings us to the central puzzle of the quarter. It's the big question, right? With all this fantastic growth, why are their credit costs, that's the money they have to set aside for loans that might go bad, why are they remaining so stubbornly high?
Well, management gives us the first big clue right here. They're openly saying that consumer leverage is a major concern. So what does that mean? It means everyday people are taking out more and more loans from lots of different lenders and stretching their personal finances pretty thin, and that's a worry.
So here's the problem in a nutshell. They found that customers who are juggling a lot of loans from different places are way more likely to get into trouble and default. In fact, that risk actually doubled inside their portfolio before they started to tackle it. So now, their response is to actively prune this segment. Basically, they're pulling back and doing less business with these riskier folks.
And this consumer stress bleeds into what is, without a doubt, their biggest challenge right now. Management described it with some really strong language, calling it a sudden and severe storm that's hitting one of the most vital parts of the Indian economy.
First, for a little context, MSME just stands for micro, small, and medium enterprises. So think of your local manufacturers, small service companies, neighborhood businesses. These guys are the backbone of the economy, and lending to them is a huge part of what Bajaj does.
This right here, this is the kind of language you almost never hear on an earnings call. Management themselves said that a combination of factors has created a perfect storm in this critical business segment. It's a pretty stark admission that there's a serious problem.
So what exactly is this perfect storm? Well, as this table shows, it's not just one thing, it's a nasty combination. First, there's a broad economic slowdown. 13 out of the 17 key industries they track are slowing. Second, other lenders are getting nervous and choking off the supply of credit. And third, all of this happened really suddenly, giving these small businesses almost no time to prepare.
So, how are they responding? With a clear 3-step plan. First, they're tightening their belts, getting way stricter about who they give new loans to. Second, for their good existing customers who are just caught up in the storm, they're offering to restructure loans to help them get through. And third, they're making a conscious choice to just slow down growth in this entire business until the storm passes.
So when you're facing these kinds of headwinds from overleveraged consumers and this perfect storm in the MSME sector, you make a decisive move at the very top to ensure you have stability.
And that's what happened here. After the previous MD resigned unexpectedly, the board moved fast to bring back a veteran leader, Rajiv Jain. It's a crystal-clear signal to the market that they are prioritizing a steady, experienced hand to steer the company through this much more complex and challenging time.
And this leadership has laid out a very clear path forward. The era of growth at any cost seems to be over, at least for now. The focus is shifting to loan quality over sheer volume. They're watching the performance of brand new loans like a hawk, using AI to get more productive, and they're openly accepting that slower growth in these stress sectors isn't just okay, it's necessary.
And this leaves us with the final, crucial question. Bajaj Finance has clearly identified the storm brewing on the horizon. They've put a veteran leader back at the helm, and they have a clear strategy to deal with it. But the coming quarters will be the ultimate test of whether that plan is enough to sail through the turbulence and come out stronger on the other side.
If you like the content, please like and subscribe. Comment on Finance Seco India.